All right. What is up, everyone? Super excited for today's video. It's been a great time in the market. I've been having a really good past couple of weeks. I know everyone was really freaking out in August once we had that big, what people were calling the next Black Monday. But as you can see in the Discord, things have been going really well, seeing some really nice profits. And these are all from the new products, the new tools that I've launched in the Discord, right? We've got the Pulse Radar and we've also got the Zone Finder. Two very powerful tools, guys. And, all of these, profits that you're seeing right here are trades from the Zone Finders and the Pulse Radar. I even put the very first trade idea from the Zone Finder, from the debut of the Zone Finder in the newsletter, which is completely free. And look at the returns, guys, over 275% on the weekly call options and over 70% on the monthly call options. So if you guys aren't subscribed, make sure you subscribe to that free newsletter in the description down below, and you guys will be able to get free valuable content, trade ideas, and other things. Now, in today's video, we're going to talk about what the market does during a rate hike cycle and a rate cut cycle, okay? Because a rate cut cycle was pretty much confirmed by Jerome Powell. Now, the thing that I really want to go into is not so much about the stock market returns, but more importantly to me is going to be the bond market. Okay. The bond market is looking like, a huge snack, right? And I think we all can feast on it. So we're going to go over not only TLT, okay, we'll go over a weekly chart of TLT. We'll go over how we got the bearish cycle completion, what that means leading into our Elliott wave analysis that, TLT has been following just amazingly. We'll take a look at the 10-year Treasury yields, but we're also going to look at some other different types of bonds, okay? We've got investment grade corporate bonds, and we've got high yield bonds right here, the junk bonds, okay? So we're going to take a look at LQD and JNK as well. These are other types of bonds that look very, very attractive. It's going to be a real good video. Be sure to smash the like button, subscribe to the channel for more, so you guys don't miss any of these videos in the future. We're also going to go over, the relationship between commodities and inflation expectations, gasoline and inflation expectations, what those mean for TLT and why those are looking like good signals for TLT. We'll also use the copper futures and break down how I use the copper futures as a signal for TLT. So lots of really great stuff that we're going to cover. Now, as always, the content provided on the channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I did start that completely free newsletter for you guys called Investment Intelligence. I give out free valuable finance and trading content, and I also try to sprinkle in some free trade ideas. There's a website associated with it, so you can click on the website, check the website out, read some of the previous articles that have been published, right? See if it's something that you guys want to sign up for and get sent directly to your email inbox. Now, I have been doing the promo code summer for the Investment Intelligence Private Trading Group. That's going to get you into the Discord, okay? So if you use that promo code, you get in for just $1 for your first month. All right. Now, as I mentioned, I just, put out some new tools in there. The price of the Discord is going to be going up significantly, in September. So you really want to get in while you can, using that promo code summer. And you basically get that one month for $1 trial. See if you like it. If you want to stay, if not, you guys can cancel and leave. Right now, inside of there, you're going to get over 20 plus swing trade ideas every week, custom scripts and indicators, exclusive intel such as unusual option activity, dark pool data, gamma levels, and more, exclusive chart layouts, and many, many more things that are inside of there. All right. As I mentioned, these were some of the trades, and I didn't even take all the trades, right? I can't manage 20 plus new swing trades every single week, right? But I'm posting all of these different trade ideas in there, guys. And, these are all from the new tools that I just added, the Pulse Radar and the Zone Finder. So if you want to get access to those, make sure you join, okay? Now, when you look at a rate cut cycle start, right, we've got some nice historical data because everyone's asking me, hey, Zach, is a rate cut, is it supposed to be bullish? Is it supposed to be bearish? What's it going to do to the stock market? Because a lot of, perma bears will tell you that it's extremely bearish. And a lot of perma bulls are going to tell you that, no, this is extremely bullish right now. This is exactly what we want. It's going to put us into a soft landing. So let's just go ahead and take a look at the data. All right. And we take a look at the returns. Overall, we've basically got positive returns from rate cut cycles in the Dow Jones, in the S&P 500, and in the NASDAQ composite. Okay. The average return for the Dow Jones in a rate cut cycle is going to be 23%, and the median is going to be 33%. For the S&P 500, the average return in a rate cut cycle is 21%, and the median is 36%. And for the NASDAQ composite, the average return is 32%, and the median return is 41.9%. So just going by the past, 5 or 6 rate cut cycles that we've had, the average return is positive. Okay, but that doesn't mean that it's going to happen all the time. If you take a look, the reason the average is positive is because of how significant the gains are during those positive periods, right? 81% here on the NASDAQ, right? 78% here on the NASDAQ composite, 50%, 44%, 56%. Right? You're seeing really, really impressive gains whenever we do have a bull market in a rate cut cycle. So yes, a rate cut cycle can be extremely bullish if you're in a bull market, but the perma bears aren't wrong. All right. Whenever, we're in a bear market, or we're perhaps starting a bear market because of a rate hike cycle, and the Fed is doing a rate cut cycle because the economy is going into a recession, it can lead to very significant, losses. Okay. The 2001 to 2004 period here was, the least painful. When you take a look at the Dow Jones, it was only down about -2%. The S&P was down about 11.5%, and the NASDAQ was down 11%. But the 2007 and 2008 rate cut cycle was extremely painful. Now, that also coincided with the Great Financial Crisis. So you got to ask yourself some serious questions here. Do you think that the current economy and, the America that we're living in right now is heading into, a crisis? Okay. We're talking about a great financial crisis, right? Maybe the second great financial crisis. Are we in that period? Are we heading towards that period? That's something that you're going to have to decide for on yourself. And then, you want to think about that moving forward, making trades, making investment decisions. But when you look at the numbers overall, every rate cut cycle has been positive for the market on average, okay? Including the negative and the positive. On average, you come out with a positive return. Now, let's talk about everyone's favorite bond ETF, TLT. And we've been trading this one very beautifully. There may be a lot of lines on this chart. Let's break it down. Let's make it super simple for you guys. This right here is your 50-period moving average. So being that this is a weekly time frame, this is a 50-week moving average. This is something that TLT has not traded above for years. Literally years and years, TLT has not been able to trade above. If you take a look, about a month ago, right over here, we flipped it to support. It lined up with our 38.2% Fibonacci level, right around 93. It also lined up with our anchored VWAPs, right? We have an anchored VWAP to the low, and we've got an anchored VWAP to the previous high. Okay, a VWAP is a volume weighted average price. You can anchor these to specific highs and lows, specific dates, periods, and time, and it will let you know who's in control of the price action. If you're above, the bulls are in control. If you're below, the bears are in control. We see that all three of these things pretty much were pinching together along with this downtrend line, and we got an explosive confirmation of the move, breakout to the upside, and now we're consolidating basically below 100. Ultimately, above 100, we're going to be coming up towards the 110 levels. Okay, that's going to be our next target area, is going to be about 108 to 110. Now, how fast that comes largely relies on the economic data that comes out, okay, as well as the Fed and how fast their rate cut cycle is going to be. Okay, because they pretty much confirmed today at Jackson Hole that we are going to get a rate cut in September, and they even opened the possibility for a 50 basis point cut. Well, when previously everyone was thinking they were only going to do 25. Now this right here is a bearish cycle completion. So what do I mean by that, right? Well, markets typically move, all right, in 3-wave or in 5-wave structures. So your 5-wave structure is going to be your impulsive move. And the way that Elliott wave theory works is basically every impulsive move is followed by a corrective move. Now, this was a very massive impulsive move to the downside. Oh, well over 50% on TLT. Okay, so what that means is that we completed a 1, 2, 3, 4, 5 down. At which point you would be looking for an A, B, C, right? That's your three-wave structure to the upside at this point. Now that we've completed our wave 5 down. Now, you use your Fibonacci retracement levels to get some targets for these retracements. Okay, so right here we've got it retracing all the way up to the 61.8% Fibonacci. It does not have to go that high. Okay, it can get stopped at the 50%, or in a very strong downtrend. Sometimes they can even reject at the 38.2% retracement level. So what does that mean? That means over the next couple years, okay, because remember, this was a multi-year impulsive move to the downside. This was like 3 years, guys, if not potentially even more, that it took for this to play out. So you're not going to expect the correction to play out in 1 year, okay? Since we bottomed. So, these are some longer term targets that you can potentially look at on TLT of about 116, 127, 137. These are just some rough guidelines to have some expectations of where TLT can potentially go in the future. Now, when you look on a shorter term basis, so this is a daily time frame here, all right? We're using the Elliott wave analysis that we've been using. If you've been watching the channel, you guys know we've been having this layout, these patterns, and this analysis for a long time here, especially if you're in the Discord. And not much has changed, really. We've just been following the analysis to a T. So we got a larger cycle, wave 1 up, wave 2 down, and we're looking for wave 3. So we're right now in the middle of wave 3. Wave 3s are the best waves to be in. Those are the most impulsive and oftentimes bring the greatest returns if you can catch a 1-2 setup, right? Which is what we got here, right? We had the 1-2 setup, and we're looking to capture this wave 3, and we're just trading in and out along this time. Now, wave 3 is going to consist of 5 waves, right? So that's our 1 up, 2 down, wave 3. So we're literally in a wave 3 of a wave 3 right here. So we're in wave 3 of 5 of this larger wave 3 at the moment. And as I mentioned, these wave 3s are very, very impulsive. These bring very strong returns. And TLT has just been a money machine lately here in the Discord. Okay. If you've been navigating this, and trading this along with me, I mean, take a look. We came up exactly to the wave 3 targets, took profit there, right? We got in here at wave 2, 61.8% retracement of this wave 1, 2. We retraced 61.8%. That is a beautiful entry. Caught this massive move that almost went up in a straight line. Took some profits here. Okay, expecting a wave 4 pullback here, right? Once we got a wave 4 pullback, got back in TLT again. Okay, got back in TLT again. And that's what I mean. We're just milking this for the ride. And, by the September rate cuts, I'm expecting TLT to be anywhere from about 102 to potentially even 105. Okay, I don't know exactly where it's going to go, right? Sometimes these things go, pinpoint to your levels like we did right here. And sometimes these levels are just meant to be rough guidelines, okay? Sometimes as technical analysts, you draw these things with a crayon, all right? You're not drawing them with a Sharpie where it's live or die by those specific levels. Okay, price action is going to do what it wants, right? And everything's not going to work 100% to plan. So, keeping that in mind, all right. I am looking for TLT to go anywhere from about 102 to 105. But there's still a little bit of time before the September rate cut. I mean, we could really head up all the way up here to the 109 to 112 area. It just depends, right? It really just depends. And we're going to see how much, the market starts to anticipate these Fed rate cuts and start continuing to price that into the market. And we'll see how things are moving along. For now, we're just, tracking the waves, right? And so being that we got the wave 3 up and the wave 4 down, our next wave 5 targets are going to be from about 102 to about 105, right? So those are the next key levels that I'm watching on TLT. And we really just need to hold above right here, which is going to be roughly 95. Okay, so above 95, all of this analysis is still valid and not invalidated. Now let's look at some treasury yields. Okay, Could we potentially see a little bit of a pullback actually in the bond market, even though we just got these signals, from the Fed that essentially we're going to have this rate cut cycle? I think the short answer there is yes, it's very possible. Now, you guys know I'm still bullish on bonds. This whole video is basically about the opportunities over the next 6 to 12 months that there are in the bond market, and even in the shorter term, over heading into the end of the year, there's lots of opportunities in the bond market, I think. But let's take a look at some things here. We've got support, right? Support on the TNX, the 10-year Treasury yield. Support bounced again, support bounced again. Ultimately, I do think this is going to resolve lower. And over, this, rate cut cycle, I think we're going to be starting to head down towards 3.28, right? That is the last major support level that, the 10-year Treasury bottomed at when you're talking about its higher lows, right? You had, low, you had higher low. Now we've got equal lows, and we're going to look to continue this downtrend of, highs, lower highs, and then we'd look to put in some type of lower high over here, but more importantly, we have lows, lower lows, and we want to establish a lower low down here. So the reason I say that maybe we could perhaps see a little bit of a pullback in the market is we do have some bullish divergence setting up in the 10-year Treasury yields, right? You take a look at the RSI, we're making consistent higher lows here while price action is really just going sideways. Does that mean that I think that bonds are about to crash? No, I don't. But if we were to see a little bit of a bounce, maybe form an inverse cup and handle, right? With this being the cup, maybe if we bounce a little bit and chop around, then that would put in a handle, and that would be very textbook, right? If we were to get an inverse cup and handle to take us down to our target right here, right? If we were to do something like this, okay, boom, boom, and then break through that, the top of that or the bottom of that inverse cup and handle, I think that'll send us right down towards that target of 3.28. Let's just round it up to round numbers and call it 3.25 on the 10-year Treasury yield. Now, LQD looks really amazing here, okay? So it's not just TLT. There are other options. You can look into the specific risks and dividend yields and different things like that. But when you look at the charts, I mean, these look amazing, right? LQD is breaking out, no, arguments about it, right? We've got a clean base here. We've got a huge round bottom, right? A nice large round bottom. That's that Kardashian pattern, right? We've broken through the trend line here. And if you take a look at the volume, this is the volume profile, okay? So over here, this is volume by price, not volume by time, but volume by price. Look at this massive volume gap that we're potentially approaching from 115 to 127.5. If we enter this volume gap, price moves quickly through these volume gaps because price likes to go from high volume node to high volume node. Okay, take a look at how quick we went through these areas here. It did not take long previously in the past, and I would anticipate we could see potentially something very similar if LQD can get above 115. It could be potentially smooth sailing or a quick move up to 127.50, right? This is that low volume node area. So pay close attention to LQD. You've got junk bonds, okay? JNK. Also, forms a nice base here, nice base here. We're finally breaking out, okay? These are decisive breakouts. These are things that often lead to a regime change, a momentum change. And right now we're setting up a bullish candlestick pattern known as 3 white soldiers, indicated by these 3 candlesticks right here. This is a bullish chart pattern. This is a chart pattern that typically leads to bullish continuation in the future. Now, remember, this is also a weekly time frame, so that's important there as well. So that means over the coming weeks, it's very possible that we continue to see bullishness in J and K. Now, does that mean it has to go up in a straight line? No, it doesn't. But that is a very good signal right there as well. Now we've got the HYG. These are your high yield corporate bonds. Okay, almost looks exactly the same as LQD and J and K. We're seeing a lot of the same things in these bonds. Okay, and these are patterns that we've been buying for the past year or two in tech stocks, right? And when you're having these stocks, forming these large bases, breaking out of, multi-year bases, these are very bullish things and can oftentimes lead to very explosive moves. Now, the bond market is not going to be nowhere near as explosive as Nvidia. So I'm not telling you that these bonds are going to double or triple or anything like that. But there are ways to leverage your exposure to bonds. You can trade futures, you can trade options. There's lots of risks associated with doing that, especially trying to, pick specific expiration dates and, time those things can, add another layer of difficulty to that. That's some stuff you guys can research. But when you just look at the charts, I mean, these are all amazing, right? We finally got rising 50-day moving averages on a lot of these charts, no longer declining. We're trading above them. You're seeing when we're holding the 50-day or the 50-week moving average on all of these charts as support. I mean, these are great signs. Now, when you come over here and you look at the commodities index versus your inflation expectations, the reason we're looking at this is, because commodities play a large part in inflation, right? And so when we saw this breaking out, what that resulted in was inflation expectations breaking out here as well. And it looked like inflation expectations were going to continue to rise, but they actually rolled over, right? We had a false breakout in the inflation expectations. This is rolled over, and the commodities index has not continued to break out and continue to go higher. We've established a high and then a lower high here as well. So we'll be looking to, we don't need to see this break down significantly. We would rather just like to see this continue to chop sideways, potentially even get below 325, will be a good signal for inflation and the bond market. You can also look at the gasoline fund. When you look at these guys, they move very similarly to inflation expectations, right? The commodities index almost mirrors the inflation expectations. The gasoline fund almost mirrors inflation expectations. And what do you see here? Here we had that false breakout in the inflation expectations. Meanwhile, gasoline funds were actually putting in a lower high, right? So we had the high, then we had a lower high here, another lower high here. So this also looks good for inflation and the bond market. And when you look at copper futures, they oftentimes call copper Dr. Copper because, it can be a very good economic indicator and tell you things about the strength of the economy or weakness in the economy. And oftentimes the historical relationship with the bond market is, hey, if you're getting hot economic data, typically you're going to see inflation expectation treasury yields go down, which is going to result in bonds going up, right? That's the relationship that bonds have with treasury yields, okay, with yields. As yields go up, bonds go down. As yields go down, bonds go up. So if things are looking bad in the economic data, you're going to see bonds go up, okay, and you're going to see treasury yields go down. And so we had this period here where copper was just going on this massive run, signaling, potential strength in the economy, and we continue to see the bond market go down. Well, since then, we've seen copper futures roll over, right? Highs, lower highs in a downtrend, and we've seen bonds start to, start in uptrend, right? Where we're establishing lows, higher lows, higher lows, higher lows. So, if you're using this as a proxy for just TLT, you're going to typically want to see these continue to move in this inverse relationship. That's the inverse relationship that they've had this entire year. Since 2024 has begun, these have had an inverse relationship. Okay, so if that's going to continue being a signal, then you're going to want to continue to see copper futures not really break out, right? Because if they break out, that could signal a potential pullback in the bond market just by looking at their relationship here. Now, that's going to wrap up today's video. Don't forget to join the Investment Intelligence private trading group using the link in the description, right? If you use that promo code SUMMER, you guys will gain access to the Discord for just $1 for your first month. So you're not going to want to miss out on that because the price is about to go up significantly in September with all of the new tools and features that I've been adding in there. Remember, inside of there, you're going to get over 20 swing trade ideas every single week. You're going to get custom scripts and indicators, exclusive intel, exclusive chart layouts, and there's so much great stuff inside of there. So I'd love to have you guys in and join the community. If you don't want to pay for anything, join the newsletter, subscribe to the newsletter, okay? No one's forcing you to do it, but I do think that I try to provide value in everything that I do. So you guys can, go to the website, read some of the previous articles that I've published, right? See if it's something you're interested in. If it is, you can get those sent directly to your email inbox. Now, if you ever want a coaching session, right? A lot of people, they have lots of questions, okay? Whether it's about trading options, whether it's about day trading dynamics, some of my swing trading strategies, or they just want to have an interactive Q&A session. You can book a coaching session by clicking on the Ko-Fi page, click on the commissions tab, and in there you can book a 30-minute or a 1-hour session directly through that, right? You can also click on this buy a coffee button, basically a way to leave a tip or donation for all the free valuable content I put out there, such as this video, such as the newsletter, and different things like that. So I appreciate y'all watching, and I will see you in the next one.